Imagine investing in one of the world's most recognizable brands at a time when many investors are giving up on it. Sounds risky, right? But sometimes the biggest opportunities appear when fear is at its highest. Nike, the company behind the famous swoosh logo, has dominated the global sportswear industry for decades. Millions of people wear Nike shoes, athletes sign billion-dollar endorsement deals, and the brand has become a symbol of performance and style. Yet today, Nike stock is under pressure. Sales growth has slowed, competition is increasing, and investors are asking one important question. Is Nike stock still a smart investment, or has the company's best days already passed? In this video, we'll explore Nike's business, why the stock has struggled, the biggest opportunities ahead, and whether long-term investors should pay attention. Let's begin. Chapter 1. Nike's incredible success story. 1 to 3. Nike wasn't always the global giant we know today. The company was founded in 1964 as Blue Ribbon Sports by Phil Knight and Bill Bowerman. Their vision was simple: create better athletic shoes for runners. Over the years, Nike transformed into the world's largest sportswear company through innovation, powerful marketing, and partnerships with legendary athletes like Michael Jordan, Cristiano Ronaldo, LeBron James, and Serena Williams. Today, Nike sells footwear, apparel, sports equipment, and digital fitness products in more than 170 countries. The company generates tens of billions of dollars in annual revenue and owns one of the strongest brands in the world. Nike's business model is powerful because customers don't just buy products. They buy the brand, the lifestyle, and the identity associated with it. That brand loyalty has helped Nike stay on top for decades. But even the strongest companies face challenges. And that's exactly what's happening today. Why Nike stock has fallen 3 to 430. Over the past few years, Nike has faced several major problems. Consumer spending has slowed as inflation and higher interest rates have made people more cautious with their money. Competition has also intensified. Brands like Hoka, On Running, Adidas, and New Balance have gained popularity, especially among runners and younger consumers. Nike has also struggled with inventory management, supply chain disruptions, and slower demand in important markets. These issues have affected revenue growth and investor confidence, causing the stock price to decline significantly from its previous highs. However, experienced investors know that falling stock prices don't always mean a company is permanently broken. Sometimes they create opportunities. Nike's financial strength, 430 to 630. Now let's talk about the numbers. When evaluating any stock, investors don't just look at the share price. They look at the company's financial health. Despite recent challenges, Nike remains one of the strongest companies in the athletic apparel industry. The company continues to generate billions of dollars in annual revenue and maintains healthy cash flow, giving it the flexibility to invest in innovation, marketing, and future growth. Nike also returns value to shareholders through dividends and stock buyback programs. These are often signs that management is confident in the company's long-term future. However, investors have noticed slower revenue growth and pressure on profit margins. Rising operating costs, increased promotions, and changing consumer demand have all impacted earnings. This is why many analysts believe Nike is currently in a transition period rather than a period of rapid growth. The big question is whether this transition will lead to a stronger business in the coming years. Chapter 4. Where future growth could come from, 630 to 8. Although Nike is facing challenges today, the company still has several exciting growth opportunities. One of the biggest is its direct-to-consumer business. Instead of relying only on third-party retailers, Nike is expanding sales through its own website and mobile apps. This allows the company to build stronger relationships with customers and improve profit margins. Nike is also investing heavily in digital technology, personalized shopping experiences, and faster product launches. Another important opportunity is international expansion. While North America remains Nike's largest market, countries across Asia, Latin America, and other developing regions still offer significant room for growth. If consumer spending improves and Nike successfully launches popular new products, the company could return to stronger revenue growth. Innovation has always been one of Nike's greatest strengths, and many investors are watching closely to see if the next generation of products can reignite customer excitement. The biggest risks. Investors should know. 8 to 9:30. Before investing in any company, it's important to understand the risks. Nike continues to face intense competition from brands like Adidas, Hoka, On Running, New Balance, and several fast-growing local companies around the world. Consumer preferences change quickly, and if Nike fails to deliver innovative products, it could lose more market share. Another challenge is the global economy. If inflation remains high or consumer spending weakens, people may delay buying premium athletic shoes and apparel. That could reduce Nike's sales and put pressure on profits. Nike also depends on a global supply chain. Rising manufacturing costs, shipping expenses, tariffs,